Hi, everyone. My name is Anne Reban. Today is February the 15th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Starting with the EWJ today, simply because Japan got some news that said they were in recession. Notice how this is just running like the wind. And as a matter of fact, the Nikkei is at 35-year highs. Now notice 2021, this is pandemic motion, people were just buying everything, right? And so it's really coming into old support that could likely be new resistance. So not sure if you're interested in a short. It needs to press forward and then reject. Okay, see this here, it's got to press forward and then reject, so the breakdown is not really until over here. Or if you're feeling a bit punchy, a little bit up there. All right, let's get to our normal discussions. Daily on SPY, we are above the prior day's open, but rejecting the 500.20. And so that's the line in the sand that I suspect this price action needs to hold in order to recover. The reason I have this in neutral to bullish, yes, we had a nice recovery day, but we've broken a trend line and we're still sitting underneath that trend line and below prior highs. We also have the jobs number, unemployment claims, whatever. Those things, those are not real numbers, folks. Those are approximations that often get revised all over the place. So are we going to buy the dip? You betcha. Buy the dip. Buy the dip. Right now we're sitting really on top of the 8 exponential, above the 21, and just barely hanging on to the VWAP. Very tight compression. If, per happenstance, we break out of this 520, we're going to have a lot of short sellers that end up coming, good heavens, that end up coming into the market to cover. All right, you've got the levels. Pretty key. Same sort of thing here, right? These are the same levels as yesterday. Essentially, I have not changed the lines here. So you can see that we are in a bit of a stagnant form and could move in any and all directions. Up above that 434.50 to 434.70, we're going to see sellers buy to cover and then a recapture of upward motion. Dips are very likely to be buy zones. We could have a shallow congestion day because we had 2 very big dips downward and then a pretty solid bounce yesterday. So we're really in a ton of volatility. My thought would still be you sell the highs, buy the lows, but to be safe is buy the lows to open and sell the highs to close rather than just stepping into the short, though the shorts will be cheap, right? They will definitely be cheap because when you're wrong, you'll know it immediately. All right, let's go to the ES. 50, 35, 25 is the line it's got to beat to sort of resume trend. It is trending upwards. Pullbacks are buy zones. Dips anywhere into these lower volatility bands, particularly the lower ones, are going to say, hey, listen, if you're like me, where you trade both the futures and the options market, because you've been around so long and you like using all your leverage tools, you're going to buy a futures options contract, or maybe you're maybe a strangle, which I love because I can never tell whether it's going to break away and fall back down or it's going to bounce. So I buy a cheap strangle and then Bob's your uncle, right? Really, really like that. Buys. I don't think this chart's really going to be in any kind of trouble unless it breaks 5,000, right? I think who's in trouble is probably the bears. Where are we? Same sort of thing. Widening range. Why do you see all this widening range? Well, you know what? We have Asia closing, Europe opening, all kinds of things happening right around this edge of motion. And so we do see the volatility bands expand. My thought with the Qs, you can see how flat this is. Bounces, likely to be sell zones. Pullbacks, likely to be buy zones. Where's this one going to be in any kind of, open quotations, trouble if it loses 17,800, 17,796. Okay, what am I inclined to do? Well, I have a tendency to be somewhat bearish. because you can make a ton of money in a really short time being bearish. But that being said, when you've got exponential moving averages that are moving straight up like this, it is telling you, listen, your pullbacks are going to be buy zones. And yesterday was an incredible example. Take a look at these volatility bands bouncing off of the first and second standard deviation, didn't even get down into the third or fourth. Absolutely beautiful. Really nice bounce zone, sends us way up into the rafters. And now we're sitting above that open. So all that said, everything in by the dip, if we see a jobs number that the market responds to poorly, let it settle out, come into where it's going, and then try the bounce. All right. For those of us that work in the futures and futures options together, we will probably enter into some straddles or some strangles today. Did I mention oil? It has rolled. Oh, for heaven's sakes. It has rolled. It's now in the J contract. I feel like I've already said this. I don't know. My brain is a sieve. But you can see the range here. 7630 is the highest volume point in the range of this chart. I suspect, have a peek, just collapsing right into support. So you know how much I love this 35 area for a buy zone, right? It's got to get up and stay up over 7640 for any continued action. My thought is selling the bounce and then seeing if it collapses. All right. Hey, that's it for me. I'll see you on the platforms.